Hey guys, what's going on? This is Robert from the Amateur Trader. Been busy today. This will be my third video of the day. Um, what I wanted to do with this video is I want to show you some of the trades that I took this week and why I took them and why they were successful and why they weren't successful, or why they weren't successful. When I first created this channel, my goal was to be transparent and show wins and losses, because I see all too often people posting all of their wins, but they never show any losses. It gives that false that false view on everything, like that it's all going to be wins and then there's not going to be any losses. The goal in trading is to take your wins and let them go for as long as you can. Take your profits and let them run. Let the profits run. Cut your losers quickly. I talk about that in another video that I've been working on. But unfortunately for me this week, this ended up being a week where I kind of messed myself up, and I ended up $28 in the hole, which is okay. It's not a win by any means. I had some good trades and I had some bad trades. However, I lost my discipline on two of my losing trades, and had I not lost my discipline on those two trades and cut my losses early, I would have been much better off, and it would have been a profitable week. So I hope that somebody learns from my mistakes on taking your profits. I talk about stop losses, I talk about taking your profits, and I talk about cutting your losses early. Always cut your losses early. If it's losing, just don't lose your money. Thankfully, it was only $28, and $28 is a lot of money, but had this been 6 or 8 months ago, I would have been telling you how I lost $150 or more and didn't make anything. I had no profitable trades, or I had a profitable trade for $150 and I had a trade for a loss because I was stupid for $300. Double what my winning trade was. All right, so I'm going to get started. Get started with AMD. I've got seven stocks, seven trades that I want to look at with you guys today. Why they were successful, why they weren't, what happened, what my thought process was on this. We're going to get started with AMD, which was actually one of the last trades that I took in the week. I took it from Thursday through Friday. I went long 20 shares. My entry was $30 even. I exited at $32.15 with a profit of $43. So this would have hit my scanner back over here, all the way back through the 28th of last month, based on this Bollinger Band cross, the price crossing the top Bollinger Band, and my DEMA line crossing above the middle Bollinger Band line. That's what my scan's set up to pick up. All right, and as you look, the price has been using the DEMA line as a support level. It's just kind of been bouncing off of it and trending back up. And this thing has had some insane volume: 146 million shares, 147 million shares, 107 million shares. Even on Friday, 86, almost 87 million shares. So we've also got this upward momentum on our MACD oscillator. The blue line's pulling away from the white line pretty good. Candles are getting longer, staying green. RSI's showing that upward momentum. Everything about this thing says buy me, buy me, buy me, buy me, make some money on me. I went ahead and I pulled out on Friday in the morning because I didn't want to hold it over the weekend. The movement in the pre-market had kind of slowed down. I didn't really know what it was going to do, especially after it has had 1, 2, 3 days of pretty much upward momentum. I'm always, watching for that pullback. So I wanted to get out of it, just to maximize my profits. I didn't set a stop loss because I wanted to keep the profits that I already had I could have made another 35 to 55 cents a share on it at the end of the day, but I don't have the luxury of sitting there staring at my phone or a computer all day, because I run a piece of equipment at a place that will fire you for even looking at your cell phone to see what time it is. So looking at charts and things like that makes it kind of difficult. I do it when I can. So I just wanted to get out of it, and I wanted to take as much profit away from it as I can. Definitely something to keep an eye out next week. It's not on the watch list because I put new stocks on my watch list video based on my scan from Friday for the same strategy. But it's definitely something to continue to watch, because we have the potential to get back up to, I need to zoom out a little bit more. We have the potential to get back up to the $34 range, which is another dollar, another $1.50 to $2 higher than what we are now. That's our next resistance point on this. There's really not much in the way. We've already kind of gotten out of everything. We had a resistance here, and you can see how it just kind of went along, and that's where we were trending sideways for the last couple of months right here with it. Now our next point is going to be up here. It's like the next stop. So we'll keep an eye on this and see what it does over the next couple of days. All right, next is PVTL. This is a stock that is on my watch list for this week for continued shorting. I shorted this on Wednesday the 5th. I actually made a day trade out. I don't do day trades all the time. I usually actually end up making like one a week, but it's generally not something that I try to practice. And the reason that I'll do it once a week, or I'll day trade when I do, is see this gap down, and I shorted it. I don't remember what time I shorted it, but I shorted it at $13.05, and I'm pretty sure that it was in the pre-market hours when I shorted it, because I saw the potential for it to continue to fall. Shorted 30 shares at $13.05. I bought back to cover at $10.57 for a profit of $74.38. The reason I didn't hold it more was I missed the 10-10 because, like I just said, I can't be on my phone all the time. It's all right. I can deal with that. I still made profit. But it started to make this little bounce. And the bounces are to be expected. My concern was that it was going to bounce, and then in the after hours of the pre-market of the next day, it was just going to keep going way back up and actually recover. I don't really believe that that's what's going to happen, because in the year we got nothing. Even in the 3-year weekly chart, we got nothing that shows any kind of support. I mean, this thing could keep going all the way down to nothing. We don't know. One of the things that made me put it on my watch list for this week was the fact that it's below this line, and it's just kind of sitting around right here. But the momentum, they're still selling momentum here, and we still have a lot of volume in this momentum. What made me enter this trade was the fact that it gapped down. It wasn't so much the scanners, because it would have been lower on my scan list, being only having 1 million volume. If you look at my scans over here, these are the scans that I use. One's a long and one's a short. I have it set up to where my highest volume shows up first. So depending on how many tickers showed up in my scan, only 1 million volume on this would have been towards the bottom. But I mean, that'd have been pretty sweet to have even those same 30, or how many was it? Yeah, 30 shares short at this 18.45, and then taking it all the way down to 10. That would have been a much better deal. But I didn't. It didn't happen. And I caught it on the gap, and I think we still have more potential for this to go down. The RSI is down, the MACD is down, the blue line is still pulling away from the white line on the MACD. Everything about this looks good. I mean, I would wait to see if it's going to bounce off of this lower bottom, or the bottom Bollinger Band line, or if it's going to wait until this MACD, or the DEMA line gets caught up. Use that as a resistance. Let's just wait and see what happens. But it's definitely something that I'm going to keep an eye out on, and it was a trade that I made last week. The last trade that was a profitable trade that I'm going to show you from last week was Fox A. And this still has the potential to be profitable, but I got out of it because I held it from the 4th, which was what, Monday or Tuesday? I held it until the 7th. I was short 30 shares at 34.36. I didn't write down what my cover was on it. I made a profit of $2.85 though, so it obviously wasn't very much. This is what tipped me to get into this trade. It's been, trending down, and obviously this would have been better up here to get out of it. I didn't look at it, didn't see it on my scan, whatever. It probably would have showed up here, but again, the volume being 30.5 million would have kept it kind of lower on my radar. As the volume kept picking up, this is where I ended up seeing it and getting interested in it. Got into it on the 4th on this doji after the bounce. What did I say? I got 34.82, so I got it pretty close to the high of the day. The high of the day was 35.25. You're never going to hit it perfect, but I got out on this doji, and I expected it to continue kind of following this Bollinger Band line down, and it still is. Well, it's still trending down according to the price, and it's using the DEMA as a resistance, which will happen. The Bollinger Band lines and your DEMA lines will act as support and resistance, but you can see it hit it 1, 2, 3, 4 times it hit on that, and we're in a descending triangle right here. And they teach that descending triangles, when they break below, they're going to break below and hard. So I'm going to be watching for a breakdown on good volume. One of the things that made me get out of it, because I want to wait and see what's happening, is our MACD candles when it went from bright red to dark red, and they're getting a little bit shorter, so we're losing our selling momentum here. The blue line is still below the white line, and it's holding about the same distance. The RSI is still oversold, so it still has that potential, but it's not there yet. It's not doing what I was hoping that it was going to do, so I got out of it. And you know what? I made $2.85. Okay, what, some people might scoff and laugh at that. You know what? I didn't lose money on it, and I still have it on my watch list for next week to see what happens, because it still has potential. Moving on to my least favorite trade of the week. Twitter, TWTR. I shorted this on the 3rd, held it through the 7th entirely. Too long. It was a couple of times I shorted it for a total of 40 shares with an average of $34.82 a share. Didn't write down what I ended up buying back at, but it was for a loss of $97.95 total. So when I went into this trade on the 3rd, it was because of this candle, and we've already had the price trending down. The Bollinger Bands have been trending down, both on the top, the middle, and the bottom. My DEMA has been trending down. We had this large price movement on big volume, 22 million volume, and so I went ahead and went short on it, and it almost immediately recovered from it, but I held on to it because in my strategy, that I haven't put the video out yet, but one of the rules in my strategy is that as long as the price is above or below, depending on which way you're going, the DEMA line, it's generally all right to stay in the trade. But what's happening here, you can see it's still below the DEMA line. It's acting as a resistance, and then it broke up, and the DEMA line's about to cross the middle Bollinger Band line. The blue MACD line's about to cross the white MACD line. Our momentum's about to change from red to green on the MACD. The RSI is over 50 going up. This almost is set up for a long position based off of my strategy. The only reason that I wouldn't go long on it is I would need to confirm that we were going long, because we've been going down since the 3rd of last month. It's been trending down. So we need to make sure that this trend is going to reverse, and it probably will. And the reason that it probably will is because Twitter, let's go back a little bit. I mean, it's been kind of bouncing around, but it's been going up since $25 since December of last year. It's been, had an up, had its pullback, had another run up. There it actually hit resistance and ran along resistance for a while, and also gave us our support for right here. We had resistance there, we had to hit resistance there, and it had a big drop off. Hit it there, had a little drop off. So we're going to see what happens with this. But this was my least favorite trade. It's not one that I'm proud of. You'll say, well, you talk about stop losses, and I do talk about stop losses. What I was looking at, though, was my according to my strategy, that I got into it too low, but I did expect it to continue down based on the massive sell-off that it had and the trend that it had. But according to my strategy, like I said, it was below this DEMA line. I was holding on to it. I wanted to see what happened to it when it broke above it and the middle Bollinger Band line. I ended it right there. So I got out of it based on the fact that it completely left everything that my strategy says for shorts, and we'll just let it go. It's a loss. It sucks because it was a big loss, but you learn from your mistakes as well, and hopefully some of you guys can learn from this. LUV, love Southwest Airlines. This was also a loss for me. From the 3rd through the 7th, 10 shares short. 47.58 was my entry when I shorted it. For some reason I didn't write down what my exit was on it. It was for a loss of $50.53. And this one definitely should have gotten pulled a lot faster. I'm not quite sure exactly what I was hoping for on this. I think it was the fact that it had gapped up 3 days in a row that I was looking for it to pull back, especially since it had this lower or downward momentum. Didn't happen. Everything about this was just horrible. The price got above my DEMA line. Seems like the middle Bollinger Band line's holding it down, but now it's going to kind of push it up into an ascending triangle, because with these lines you don't even need to draw trend lines, because this Bollinger Band line is going to come down, this DEMA line is going to go up. As long as the price continues doing what it's doing, it's going to turn it into an ascending triangle. It was just a horrible trade. It was a very poor discipline on my part. The loss should have been cut significantly sooner on the 4th, or it would have been a little bit less painful on the 5th, but the 4th, the loss should have definitely been cut. So let that be a lesson to you guys. If it's going the wrong way, get out of it before the loss becomes too much, because I made money this week, but I lost more than what I could because I wasn't maintaining the discipline that I knew that I needed with my trading, especially on Twitter and Love. Okay, the last two, and these are neutral right now. Occidental Petroleum, has been trending down for the last 2 months. Really pretty steadily down. I'm short on Oxy. 55 shares. I think I made a total of 3 short trades short sells on this to get these 55 shares. I averaged 47.46, and I shorted it on the 3rd, which is right here. $21.14 was I think I gave you guys the wrong price. No, 47.46. I shorted it. Crap, maybe in pre-market. I don't remember, but it was on the 3rd at. No, I'm sorry, it was on the 5th. I'm looking at the wrong line. It was on the 5th at 47.46. So right down here in this area is where I shorted it at the bottom after it broke that bottom Bollinger Band line again. Huge volume. I'm not really quite sure why this didn't pop up on my radar before. It still has a potential to go down. One of the things that bothers me now, and I will be looking at it to get out of it quickly. I'm right now I'm down a little bit, I think around $20 on it, but I'll be looking to exit very quickly on Monday if things don't go my way. When I say quickly, I mean like pre-market. As soon as it looks like things are going wrong, we'll be out of it. One of the things that bugs me about this is the MACD is really trading sideways here. My blue line and my white line are staying right there. It's still showing oversold on the RSI. The biggest bugger is the fact that this bottom Bollinger Band line is acting as a support and squeezing it between my DEMA line. And they teach that when you have this descending triangle, it's going to break down, but it seems like my experience with triangles is that they always go the opposite of what I think they are going to do. I hope it breaks down and hard. We'll see what happens with oil. I hope it breaks down and hard, but I will be set up ready to get out just in case this goes against me. So this is one that I'm holding, that I'm watching. I'm also holding AA. AA from the 3rd until now, 10 shares short at 21.14. Reasons that I went into this trade on the 3rd. Was it the 3rd? It was the 3rd. My MACD, I got into it a little bit earlier in the day. At the time, my MACD candle was a brighter red. This, I think I'm about even on this one, and it's going to end up being a get out on Monday. Probably should have just gotten out of it on Friday, but the MACD showing increased buying pressure, or buying, buying momentum. The price is trending sideways. Again, we're in a descending triangle. If we draw our line there and then we just use the DEMA line, we're in this descending triangle coming down. So we're going to see what happens. But the blue line's getting ready to cross the white MACD line. The momentum on the oscillator is about to change from red to green. The RSI is kind of coming up. We'll see what happens, but I'm pretty sure that this is going to end up being a get out and call it a day on Monday. And just get my money back and move on to one of my stocks on my watch list. So that's my week trading. Hopefully you guys learned something about it. Hopefully you found it interesting. I want to be as transparent as possible. It sucks showing losses, but I still want to show them because it can show you at least what my thought process was, and you can learn from the mistakes, like the discipline of not getting out of Twitter or Love as early as I could have. And that's a mistake that I've made since the very beginning. I always hold on to it. Well, I think it can do it. I hope it can do it. If it's not doing it, don't do it, because the stock market doesn't care what you think. It doesn't care about your feelings. None of that. So if you're in a trade upside down, make sure to get out of it as quickly as you can. But I hope you guys enjoyed this video. Check out my watch list. I've got 7 tickers on it for Monday. I'm going to put out a couple of watch lists throughout the week, and I will recap the stocks that I put on my previous watch list. We'll see what they did. I talk about NEM, which was one that I called out on my watch list for last Monday. It ended up closing out the week $2 higher than when I put out the watch list for Monday. So I just want to kind of talk about that. We'll see what the correct rate is, and remember, even if it's not a correct call out on the watch list, it is just a watch list. But hopefully then you guys will start to see how this strategy works for swing traders, and it's really good for those people that have to work and can't constantly be on their phone, can't be watching charts. You can kind of just set it, and as long as you're following the strategy and all your indicators and the chart is set up the way that it should be, you're probably going to be profitable on it. You're not going to be making huge dollars like some of these penny traders and day traders are, but at least it's profit. All right, check out my watch list and check out my other videos. If you like the video, then give it a thumbs up, subscribe, share the videos. Hope you guys have a good week trading, and we'll see you next time.